Welcome back. In today's video, we're going to be doing a deep dive analysis of Arthur Hayes and his investment thesis and overall macro thesis of where we are in the cycle, where we are in a global financial ecosystem, and how this is going to affect the economy, how this is going to affect your wallets, your jobs, and more importantly, our crypto asset investments. This is the Cryptoviser podcast. We talk about crypto, blockchain, and investing every single day of the year since 2018. So make sure you guys give this video an absolutely free thumbs up. Also hit that subscribe button. That way you never miss a new video. And if you enjoy this content, make sure that you are subscribed, or you can become a channel member by clicking the join button down below for more information on that, or the subscribe plus button here on YouTube. Sometimes we do deep dives like we're doing today on individual thesis or analysis or individual crypto or stocks that we're interested in investing in. And sometimes we do macro conversations about crypto and the overall global economy and how it's all impacting each other. But in today's video, we're going to be exploring Arthur Hayes' biggest prediction about the money printer beginning again. This is the Cryptoviser podcast. Let's get right into today's video. Now, as many of you guys know, the money printer, this conversation about the Federal Reserve just printing money out of thin air, it really picked up mainstream steam and conversation during the pandemic because the amount of money that they printed was astronomical. At least that was the first time that Americans were really exposed to the true numbers of what it takes to keep the US economy running. And it was in the multiple trillions of dollars for just a few months. Well, now Arthur Hayes is predicting the biggest money printing event in history, meaning it's going to be more than what happened during the pandemic. And we know when they printed all that money because of the pandemic, what happened to asset prices. Everything across the board went higher. Crypto, straight up. Some altcoins did over 100x. We also saw other things like real estate, cars, jewelry, watches, precious metals. Everything kind of just kept going straight up. We did have a correction after that, but a lot of the money printing created this bubble in prices of assets that made everyone wealthier. Because even though we corrected, we're still higher than where we were before that money printing conversation. So now the BitMEX founder, Arthur Hayes, is revealing why $9 trillion is the new money and it's inevitable. The moment the entire financial system breaks and how Bitcoin becomes the only safe haven at $250,000. Let's get into it. And by the way, if you're not familiar with Arthur Hayes, he is the founder of BitMEX, one of the crypto derivative exchanges. He is now a private investor and also the chief investment officer at Maelstrom. I think it's a private firm. But he's somebody that we really study his thesis and his viewpoints on the market because he does have a very good macro understanding of everything and how everything affects everything else. And he just tells you like it is. And when you see his tweets saying Yahtzee, pay attention because that is a winner. Anyway, so this user, Giovanna Incasa, who is a ghostwriter for Bitcoin Founders, said, "This wasn't your typical market analysis. We're living in an age where central banks have painted themselves into a corner. And to make things even more terrifying, the creator of perpetual futures sees no escape except through money printer itself." And by the way, I didn't even realize he was the creator of perpetual futures, but it kind of makes sense. And perpetual futures allow you to trade on an asset without even touching the asset itself or holding the asset. And we know that perpetual futures can manipulate markets. We saw that happen during the 2020 and 2021 cycle with the likes of Alameda and FTX, significantly manipulating the market prices of cryptos that they didn't even list on the FTX exchange, but they did list it on perpetual futures exchange. And just go look at the price action of Internet Computer Protocol in 2021 to get an understanding of how they can manipulate the price from launching at $700 down to $3. And again, Internet Computer Protocol was not listed on FTX, but it was listed on the perpetual futures exchange that they had. So that's it definitely can impact the markets. Anyway, let's listen to what he says. He reveals that the mathematical certainty behind massive money printing. Fannie Mae and Freddie Mac need $5 trillion just to keep the mortgage market alive. And then you add banking system bailouts and you hit $9 trillion minimum of what they're going to have to actually print. Let's listen to what Arthur Hayes says here. And we got a lot of videos from this conversation to bring to you. So make sure you guys give this video an absolutely free thumbs up. Let's listen to Arthur.
How they're going to print, I think, in the realm of $9 trillion-ish between now and that period of time. And that is, Fannie and Freddie, the government support entities that are allowed to create mortgages in the US, they will print $5 trillion. You will have probably up to $1 trillion purchased by the banking system due to supplemental leverage ratio exemptions and purchasing things that the foreigners are selling. And I think the banks are going to because they now don't have to hold all this equity capital against their treasury book. They can lend more into the real American economy. And so you're going to see the amount of loans going to manufacturing firms increase, which is, again, that's an increase in credit, and that will make its way into crypto as well.
Credit is debt. Keep that in mind. The more debt that's created, the more these anti-debt assets will increase. Gold, silver, crypto. These are anti-debt units. But he says, here's a twist. This isn't even a choice. It's economic physics. The debt system requires exponential growth or it collapses entirely. Arthur Hayes' calculation is that every alternative to printing leads to immediate systemic collapse. And I want you guys to think about Doge. Not the Doge crypto coin, but the Doge Department of Government Efficiency. The idea, and it seemed like it had support, was to go in and cut waste, fraud, and abuse. But then we saw an immediate reversal, ousting of Elon from the administration, and effectively a diminishing of what Doge did. I definitely think that they are continuing the idea of Doge in terms of questioning, like, what are we spending money on? But they went from potentially cutting our deficit to, no, we need to increase the GDP. And to increase the GDP, you need to pump the markets, right? You have to pump money into the economy. Pump money in the economy, everything goes higher, the GDP goes higher, but you're also devaluing the currency and creating more debt for future generations. So you're just exacerbating the situation. That's the only way to do things right now, unless you can go through that collapse. But the political negative side of that is if you create a collapse, people are unhappy with you. Let's listen to what Arthur Hayes says here.
But there could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem.
Everything leads to money printing.
Basically.
That's the solution of everything.
And it is. That is the key. When you understand that they are going to continue to print forever, literally until the system collapses on itself, and then they will accelerate the printing anyway. Look at Venezuela. You have bills that are just littered on the street because they are totally worthless. Imagine having to go to a store with 50 trillion individual bills just to buy some bread or some soda. It's like, what is going on? Anyway, he continues saying the foreign capital flight crisis. This one revealed the trigger mechanism. Arthur Hayes' analysis showed that Asian countries are pulling capital from U.S. markets, Taiwan, Korea, Singapore. They're all repatriating dollars back home to their nations. Arthur Hayes' brutal assessment is when foreign money leaves, the Federal Reserve becomes the buyer of everything. And this is not just a theory. This is what the Federal Reserve does. The Federal Reserve is the lender and buyer of last resort. And so when they're buying the debt and creating the debt at the same time, that is a problem. And it does have longer term effects on the system and on your pocket. Let's listen to what he says here.
Well, foreign money went into the U.S. because the U.S. markets have been the best performing, whether it's stocks, bonds, or real estate. And if that money is leaving and it's going to go back into their local markets, then the U.S. markets don't do so well. And maybe it's better to own Taiwanese stocks or Indonesian stocks or Thai stocks or all these other emerging market countries who are basically going to say, okay, we're forced to repatriate this money back onshore. Our currencies appreciate. Our consumer gets wealthier because now they can purchase more things, and maybe people want to build business domestically to service that economy.
And that is the situation the U.S. is in. And this is where you see a lot of what the president is trying to do is bring jobs back, right? Bring manufacturing back so that the US becomes the hub. We're not just the consumers anymore. We're also creating things and making things and building things. So the problem is US markets needs constant foreign inflows to maintain valuations. Without that capital, asset prices collapse or money gets printed. Arthur Hayes predicts that they'll choose inflation over deflation every single time. And then another thing that they talked about is the traditional assets entering a death spiral. Arthur Hayes explained what really breaks the old system. Boomers need to liquidate assets for retirement income. But millennials don't want their overpriced houses or dividend stocks. But here's the devastating math. And I would agree, before we get to his comments, this is something that we're seeing, right? Boomers, you can literally just go on Zillow and just look at these homes. Some of these people, like, they bought the home in 1970 and literally never did anything to it. Everything is from the 1970s. And they maybe bought the home for like $70,000 in 1970 and never updated it or anything. You know, the shell is pretty good. But now they think that it's worth $750,000. It's like nobody's buying it. So they lower it to 745 and then 744 and 743. It's like, no, nobody's buying this for that. Like, you're going to have to significantly reduce that. But the boomers don't want to let it go, and they don't have to let it go. So then what happens, right? At some point, they pass on or move or whatever, moving with the family. The family's going to end up selling the home at a much more lower price, take the money, and it's going to go into other assets and not into another home. And so that's going to create a lot of imbalances in different markets as well. And the same thing in the stock market, right? If you inherit Coca-Cola, right, that your parents were holding for 40 years, you know, in their retirement account, are you going to hold Coca-Cola stock, or are you going to sell it and buy something else? And so this creates a situation where somebody got to go in and buy that market up. Otherwise, everything's going to crater. And this is what we're seeing. Traditional assets are going to enter the death spiral. I think we're already seeing it in the housing market because, again, a lot of these homes, they've been on the market for a year, 2 years, 3 years in these areas that nobody really wants to move into, and they're not lowering the price. And so what is eventually is going to happen? The market is going to crater. Anyway, let's listen to what Arthur Hayes says here.
For crypto. Yeah, for crypto, right? Because, or any other types of digital assets, because the boomers have stocks to sell. Does anyone want these stocks? Maybe to some extent. Do they want that big suburban house or whatever they have, or apartment in the city? I don't know. So I think there's going to be a massive issue in terms of if the younger generation wants to buy things that the older generation is selling, and they need to sell those things to fund their retirement. How does that square? Are they going to increase taxes because the asset prices of things the boomers own and went down and they can't afford their retirement? So then they're going to tax the young more to pay for their retirement. And are the young going to accept that? I don't know.
What would you guess?
By the way, I think the young would accept that, but I don't think that they should, right? Because at the end of the day, if a boomer needs the money and they're not selling their home, like, the whole idea of owning the home is that you don't have to pay into it, and that your retirement money that you saved will be a lower cost. Or you can sell the home, right? If your home is worth $500,000 and that's going to hold you over for, 25 years, maybe it's time to sell and then just go rent or live with family or downsize. But what Arthur Hayes is saying here, a lot of validity that people are not really thinking about right now.
What would you guess?
I think there's going to be a lot of intergenerational conflict. I don't know the outcome of it.
What?
But it could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem.
Everything goes back to printing more money. And so he continues saying, if there's no bid for boomer assets, the government prints money to create artificial demand. Asset prices support become a political necessity, not an economic choice. Arthur Hayes realized intergenerational wealth transfer happens through inflation, not inheritance. Interesting. Intergenerational wealth transfer happens through inflation, not inheritance. That is very interesting. Because again, you can inherit something that doesn't have any value anymore, right? Like, the parents' generation, you may have inherited like a stamp collection, for example. And to that generation, that stamp collection is worth potentially tens of thousands or hundreds of thousands of dollars. But the next generation, it's worth zero. Zero. And so when you're in those assets that are anti-debt and anti-generational thing, right? And maybe they're not all, but at this time they are, right? Crypto, those type of assets, those are going to gain value through inflation. And so that's something I've never really thought about until Arthur Hayes said it here. Anyway, for someone tracking demographic trends, the money printing became inevitable. That's when Arthur Hayes saw Bitcoin as the only escape pod. Very interesting. Let's listen to what he says here.
As well. Why would Bitcoin in particular outperform everything else in a
So
heightened
Bitcoin
liquidity?
has a fixed supply. It's obviously a much smaller market in terms of market cap. And so if you have a lot of things chasing a very small door, then the price goes up on the margin. And so that's why Bitcoin has been the best performing financial asset in the last 15 years.
It's a pretty simple answer. Anyway, he also talked about the currency war acceleration. Hayes revealed why the global dollar demand is collapsing. Countries that kept currencies artificially weak are now strengthening them. Capital controls on foreign investment in the U.S. assets are coming. Interesting, because capital controls usually see capital flight as well. And so here's the chain reaction. Arthur Hayes says less foreign demand for dollars mean more domestic money printing to compensate for those less foreign buyers. The dollar's reserve status has become a liability to those other countries, not an asset. This is key here, guys, because this is going to affect everybody. America has to print more to maintain the same level of economic activity. Let's listen to what he says here.
Something else. So I'm not going to own that. I'll own something else. So I think that's going to start happening.
Does that mean a market crash?
No, because they'll print the money to make sure that all the foreigners who leave, they'll replace that with printed money.
And so that's the thing. When you hear too big to fail, specifically with stocks and companies, they will not let these companies fail, because if they fail, America fails. If they fail, investors fail. If they fail, Americans fail. And so they're not going to let it fail. This is why you see companies like FTX, everybody got their money back because they couldn't not do that. Now, whether they actually recovered the funds or printed it, I don't know. I don't think it matters. I think that what matters is people got their money back. And I think that's the way that most people think, and it will probably continue to think. So the asset hierarchy revolution, Arthur Hayes dropped this insight about what survives the storm. Traditional assets require constant money printing to maintain the prices. Bitcoin requires no external support. Scarcity is built into the code. Now, keep in mind, people are like, no, Cryptoviser, traditional assets don't require constant money printing. Then why do all these companies have to do billions of dollars of stock buybacks every single day, every single year? They all do it because they have to keep their stock price elevated. Otherwise, if they're not the buyer, puff of air, straight down. And they all do this. It's quite unbelievable. I mean, even MicroStrategy, they're selling their own stock to buy Bitcoin, you know? Anyway, Arthur Hayes said assets that need money printing to survive will get more money printing. Assets that don't need support will absorb that excess liquidity. Hayes' portfolio logic is own things that benefit from money printing, not things that require it. This distinction becomes the difference between survival and extinction. Now, Arthur Hayes also discussed the $250,000 mathematical certainty for Bitcoin. Hayes proved the ultimate monetary truth is that $9 trillion is chasing Bitcoin's 21 million Bitcoin supply, and that creates an obvious price target. Simple division in a world of complex financial engineering, and these revelations expose the new reality. Now let's listen to what Arthur Hayes says here, and don't forget to give this video an absolutely free thumbs up. Try to bring you guys the best kind of information so that you can have the best investment portfolio that you can create by having all of this information to make these good financial decisions. So hopefully you guys enjoy this content. Let's listen to what Arthur Hayes says here.
to 250 by end of the year. Is that still your timeline, or have you
Yeah,
changed
so
things
I think
since?
that we get to 250,000 by the end of the year. It'll be bumpy along the way, obviously.
Yeah.
That's sort of my end of year price target. And then $1 million Bitcoin is what I just got off stage talking about how they're going to print, I think, in the realm of $9 trillion-ish between now and that period of time. And that is, Fannie and Freddie, the government.
To 250 by end of the year.
So he said the smartest investors have something that can't be manipulated, mathematical certainty. Look at Arthur Hayes himself. He built an empire by understanding derivative markets. Now he's positioning for monetary derivatives in a world of infinite money printing. Finite assets become infinite opportunities. So when you understand economic inevitability, you position for the money printing storm before it hits. You avoid assets that require government life support, and you bet on mathematical scarcity over political promises. Your ability to see the economic endgame just became your edge. And I would agree with all of these things, right? Position for the money printing before it hits. Because once it hits, there is a little bit of a delay before the economy, like it trickles into the economy and the asset prices go up. So you need to be in before the money printing hits. And so that's why now in the end of 2025, a lot of people are not wanting to sell because they believe that, we're going much, 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 much higher, which we may go in, 250,000 or even higher than that. But here's the deal. If you're buying at 100,000, waiting for 250,000, you didn't buy before the money printing. You bought when they said they were going to money print, right? This whole thread and all these videos that we're showing you are Arthur Hayes telling you the government said they're going to print $9 trillion and that $9 trillion is going to be chasing these assets. And so we know already that is occurring. So we're already late, right? Now, not late in the long-term thesis. I'm talking about the cycle thesis. In the 4-year Bitcoin cycle, bull run, bear run, and then a little bit in between of just sideways trading. But yeah, you have to be ahead of the curve, way ahead of the curve, especially in these kind of things, or you just have to think a lot longer term. But you also want to avoid assets that require government life support, right? And so, yeah, these companies that are doing buybacks, issue. The companies that are heavily owned by BlackRock, State Street, Vanguard, that's a problem as well. And so that's why when we're talking about crypto now getting Wall Street support, it's just going to continue to accelerate because you don't need any of those, mechanisms like stock buybacks to keep the price of Bitcoin higher or keep it elevated. Because at the end of the day, it's really just a counter indicator to the money printing. As money printing goes up, as more debt is created, the crypto goes up, right? And so that's pretty much it. I mean, I think that Arthur Hayes has one of the clearest thesis about where these markets are. It's a very macro thesis. He's very calm. He's not a maximalist. He's not, sometimes he gets a little bit excited about individual cryptos or individual projects, but he's a trader, right, in the markets, and he wants to make money in these markets, and he wants to take advantage of the fact that, these markets can counter a lot of what the traditional market manipulation and control has. And it's a very simple thesis, right? Short-term trading, long-term trading, or just holding. I think that what Arthur Hayes can see from a global perspective and put it all together in a very cohesive, easy to understand thesis. That's what we try to do on this channel, right? There's a lot of people who just they're just bulls, numbers going to go up forever, we're never going to have a bear market, got it, who cares? But we want to understand on this channel how this whole system works, why these companies are doing buybacks, why they need bailouts, why the government won't allow these companies to fail, what this means for crypto when crypto doesn't need a bailout, won't need to do stock buybacks, doesn't need any of that. It's literally the counter to the entire system, to the banking industry, to the stock market, to the debt market, to the Federal Reserve, to the money printing, to the banking cartels. It's literally anti the whole system. And this is how things change over the course of time. because as crypto continues to grow in usage, in holdings, in store of value status, in potential reserve currency status, there, like, it's literally pushing the old system behind, like quite literally. Because if you inherit, let's say, $500,000 in Coca-Cola stock that your parents got, back in the day for 5 cents, what are you doing with it? You're going to hold Coca-Cola stock, or are you going to buy Bitcoin or buy a home or whatever you're going to do with it? Most likely, you're not going to hold it in Coca-Cola stock. And so if Coca-Cola stock starts to go down because the boomers' inheritance, the next generation, is selling it off, then who needs to buy it? Well, either the company needs to buy it back, the government through money printing, or the company needs to just let the stock go down. But again, if Coca-Cola fails, America fails, because Coca-Cola is an American brand that's produced for people around the world. And so that's the mechanism here. And I think that Arthur Hayes has laid this out very, very well. And, I am definitely following Arthur Hayes to see what his thesis is as we move forward, where he thinks the money is going to flow. But I really don't, he may get bullish on like cryptos or projects here and there, but I don't think that his general thesis is going to change. I think it's Bitcoin, Ethereum, Solana, maybe some meme coins. And that's pretty much it. So let me know what you guys think down below. And let me know if you like these kind of breakdowns of tweets and breakdowns of interviews and conversations like this, because we can do this with many other interviews. We can do it with Tom Lee's interview recently on Bankless. And, I can give you guys my extended insight on what he's saying and kind of how I believe that this is all going to tie into crypto. If you want to see that, make sure you guys are subscribed to the channel. Let me know down below in the comments. Give the video an absolutely free thumbs up and consider becoming a channel member by clicking the join or subscribe plus button down below here on YouTube. I'll see all of you on the next video right here on the channel. Invest responsibly, do your own research, and crypto on.